To keep you updated on the capital and financial markets, here is a recap of what happened.
Money managers are the most bullish they have been in 3.5 years, flying in the face of institutional warnings about the danger of a bubble in the financial markets. Investors are holding all-time low levels of cash at just 3.3%, according to an influential monthly survey from the Bank of America, mirroring levels of optimism last seen in the post-COVID boom. The amount of capital they have allocated to stocks and commodities is at its highest level since 2022, while expectations for global growth and global profits are also high. There were 203 respondents to the Global Fund Manager Survey, with $569 billion in assets under management. More than half were long on the Magnificent Seven, the largest tech stocks. China's markets shed the uninvestable tag this year. To bury it for good, investors say an acceleration in the domestic economy is needed so the bullishness doesn't fizzle out. The country's equities, currency, and onshore fixed income markets remain on course to hand investors positive returns for 2025, a scenario unseen in half a decade. Yet the stock market's rally has lost steam in recent weeks, while bond yields are low due to widespread deflation. Heading into the new year, consumers remain downbeat and the property market is stuck in the doldrums. That leaves the economy being propped up by an ongoing export boom that should be just enough to allow the nation's leaders to meet their growth target of about 5%. India's markets regulator approved changes to mutual fund fee structures to provide more transparency to investors, but postponed a decision on a new framework aimed at addressing conflicts of interest among its senior officials. The Securities and Exchange Board of India approved measures to encourage a transparent breakup of costs charged by mutual funds and to mandate disclosure of all the components of such charges. Global shares crept higher after the tech sector got hit by renewed concern over AI spending, and investors prepared for a series of central bank meetings that will probably reflect the divergence in worldwide monetary policy. Geopolitical tensions are roiling commodities markets. Oil prices extended a rebound from 5-year lows after President Donald Trump ordered a blockade of all sanctioned oil tankers entering and leaving Venezuela. Silver hit a new record that helped pull up gold. Sterling fell for a second day, after an unexpected drop in UK inflation on the 17th of December all but guaranteed a rate cut from the Bank of England later on the 18th of December. The EU has agreed measures to boost investment by private individuals in stocks and bonds in the bloc, as part of long-standing efforts to strengthen the wider economy by encouraging retail investment. The retail investment push is part of the EU's decade-long Capital Markets Union, designed to support the free movement of capital across the bloc's financial markets and increase the amount of funding available for European companies. It aims to encourage individuals to move funds out of bank deposits, where many typically hold their money, generating low returns, and into stock and bond markets. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry. FIMM is pleased to announce the release of its latest annual report, now available on its official website. Link in the description.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.